Welcome back to the newsroom here at Bloomberg TV India. Now, US-based Cognizant has turned in a solid quarterly performance, driven mainly by higher spending from top clients in the US, such as JP Morgan Chase, as well as a strong show as what we've seen from its healthcare business. Their revenues have risen 20 to $2.9 billion. Their net headcount addition for the quarter is about 6,200. The company has raised its full-year revenue and its EPS guidance as well. Let's connect with Chandra, the Executive Vice Chairman at Cognizant India. A good set of numbers there. Thank you very much for joining us this evening. Your revenue, I'm seeing, has jumped 20%, Mr. Chandra. Tell us what has led to it.
It is our, strategy that we have been outlining for, several quarters now. We see very strong demand for all our services. Right in the forefront and center is actually the demand for our digital transformation capability. We have been able to help our customers transform their business leveraging digital technologies. This calls for, design thinking, the capabilities that we need to have on all the digital technologies, plus a very strong domain knowledge to transform the business. So I think the investment that we have made in all these three areas is really helping us to get a lot of mind share as well as market share in the digital space. And, it's not just those, what we call as the digital works, but this also drives demand for our traditional services. So digital transformation is a big piece of the demand pipeline that we see for our services. And to complement that, most of the customers are also looking for cost takeout in their regular day-to-day operations. There again, we have been able to significantly contribute to bring down the total cost of operations for many of our client engagements. Now, these are traditional services like application maintenance, business process services, infrastructure services, where we have made a lot of investments, built a lot of capabilities in terms of automation. And we are able to offer a very unique value proposition to our clients by bringing all these service lines together and taking on multi-service line deals. We are able to bring synergy and reduce the total cost of ownership for our customers. So that's, again, driving demand for helping our customers run their business better. And lastly, we have also been consciously making investments in building industry utilities for certain key business processes. For example, claims processing in healthcare or clinical data management for life sciences customers. These are industry utility platforms that we have built, and customers are now embracing these platforms and moving to a different engagement model like output-based or outcome-based, which is again, positioning us very uniquely in the marketplace. So on the one hand, we are able to gain significant market share on digital transformation. On the other hand, we have been able to get a lot more business to help in the area of helping the customers run better by bringing in operational efficiency. So we are able to win business across all spectrums, and that's what has helped us to grow faster than the peers in the industry.
Right, but that's the first quarter. What's the outlook for the full year's revenue, Mr. Chandra?
Our outlook is, pretty good. And as we have mentioned in the earnings call, our demand pipeline is very robust. And that's the reason, not only our Q1 was exceeded the guidance that we had given earlier. For the entire year, we have increased our guidance to at least, 19.3% growth. That will take us to about 12.24 billion at least for the 2015. So we have revised our guidance upwards. It's a reflection of very strong pipeline that we see for our services. And, we also reported, many large deals that we won last year, and many of them will start contributing during the second half of this year. So overall, we are very happy with the way 2015 has begun, and we are very happy with the pipeline and the type of opportunities that we have won and we are pursuing. So overall, very, very solid, outlook for the current year.
Right, but now rising attrition levels, those are a worry for the industry. How's it been for you?
Our attrition, last quarter was 14%, which is lower by 10 basis points compared to the same period last year. Obviously, we continue to stay very close to how the attrition turns out, and we will do whatever we need to do, intervene and bring the attrition under control. But so far, I think all the steps that we have taken is really helping us retain talent within the organization. As you know, our attrition that 14% includes, people from BPO, trainees, anybody who has joined and left Cognizant. So we are keeping a close watch on attrition.
Sure. Now, tell us which areas are you going to expand to, both geographically speaking as well as creating new service lines?
I think as an organization, we believe in bringing global talent. We always say that bring the right talent at the right location at the right price so that we are able to offer the right solution to our customers. And towards that pursuit, we have been expanding our global delivery footprint, not only in offshore locations, but also nearshore locations and, closer to customers in their own geography. So that way customers feel that Cognizant is a local organization, but at the same time bring the global capability to their engagement. So that has always been the strategy, and we'll continue to pursue that. And, we've been consciously expanding our global delivery footprint.
Well, good luck with that, Mr. Chandra. It's great to have you with your perspective on the numbers that have...